Every country on Earth is in debt. The United States now owes more than $38 trillion, the highest figure in its history. The European Union carries around 14 trillion, Japan nearly 9. Even oil-rich nations like Saudi Arabia and export giants like Germany and China all owe enormous sums. But here's the paradox. If everybody owes money, who exactly is owed? This is the financial tales, where money, power, and history collide. And nothing is ever as simple as it looks. Debt isn't just a burden. It's the invisible architecture of the modern world. Every war, every boom, every crisis sits on top of it like a building on hidden foundations. When we talk about civilization today, we're really talking about a civilization built entirely on IOUs. And if you follow the chain of creditors long enough, you find something unsettling. The world doesn't owe money to a single person, or even a single institution. It owes it to itself. But that doesn't mean everyone benefits equally. To understand how we arrived here, a planet drowning in over $300 trillion of debt, almost 3 times larger than the global economy, we have to go back, centuries back, long before digital wallets or credit cards, before Wall Street skyscrapers or IMF bailouts, to the age when kings fought wars they couldn't afford. It began, as many financial revolutions do, with desperation. In 1694, England was locked in a brutal conflict with France. The crown was running out of gold, the treasury was empty, soldiers unpaid, and defeat loomed. Out of that crisis came a deal that would reshape the modern world. The king approached a group of London merchants and offered them something revolutionary: lend money to the state, and in return receive a permanent stream of interest payments backed by future taxes. To manage this new arrangement, a central institution was created, the Bank of England. For the first time, a government could spend money it didn't yet have, and the lenders received something just as valuable: a promise from the state, one that could be traded, bought, and sold. That promise was the birth of the government bond. It was an idea so simple, yet so powerful, that it spread like fire. France copied it. The Netherlands perfected it. The newly independent United States adopted it to fund its revolution, then used it again to build railroads and expand westward. National debt ceased to be a mark of failure. It became a badge of credibility. The ability to borrow became the ability to rule. Empires once conquered territory to seize gold. Now they issued bonds to harvest interest. The battlefield moved from the field to the ledger. The sword gave way to the signature. Over the next 3 centuries, debt evolved from a tool of survival into the bloodstream of capitalism. Nations built industries with it. Corporations expanded through it. Families bought homes and dreams upon it. Every layer of modern life became entangled in its logic. Fast forward to today, debt has become the world's most dominant export. The United States owes 38 trillion. Japan owes 9. The European Union 14. Global borrowing grows by roughly $1 trillion every 100 days. Every nation owes. Every bank lends. Every citizen, through taxes, savings, or pensions, is both debtor and creditor. But if everyone owes someone, who holds the other end of the rope? The story begins again with America. Because its debt isn't just national. It's global. Out of that 38 trillion, roughly half is held by investors rather than by the government itself. About 2/3 of those investors are American banks, pension funds, mutual funds, insurance companies, and the Federal Reserve. The remaining third, close to $9 trillion, belongs to foreign holders. Japan tops the list with about $1 trillion in U.S. treasuries. China follows with roughly $800 billion. Then come the UK, Luxembourg, and Belgium. So when headlines say America is in debt to China, it's true, but only for about 2% of the total. The vast majority of what the U.S. owes, it owes to itself. The Treasury issues bonds. American banks and funds buy them. The Federal Reserve often buys them back, creating new dollars in the process. Then, Americans pay taxes to fund the interest on those bonds, which flow right back into American retirement accounts and financial institutions. It's a loop. A mirror reflecting the same system back onto itself. The debt is real, yet the creditor is mostly a reflection in the same glass. And that mirror doesn't stop at America's borders. Japan lends to the U.S. through treasuries. The U.S. lends to Europe through the IMF. Europe lends to developing nations through the World Bank. And those developing nations lend back to the rich world by parking their foreign reserves in Western bonds. It's a planet-wide game of hot potato, except the potato is made of promises. Every country holds someone else's IOU. Every promise is secured by another promise. Picture a poker table where every player has borrowed chips from the next. The only rule keeping the game alive is that nobody stands up. Over time, the game became self-sustaining. Governments issue debt, markets absorb it, central banks manage it, and the confidence of investors, not the gold standard, not backing, not repayment, keeps the wheel turning. That confidence is the true currency of the modern age. Behind every government bond sits a web of institutions, hedge funds, pension funds, sovereign wealth funds, and central banks managing tens of trillions. They decide who can borrow cheaply and who must pay a premium for survival. When they lose confidence, currencies collapse, governments fall, and entire economies are reshaped overnight. Democracy may decide who governs. Markets decide who survives. And the ultimate market maker, the modern high priest of the system, is the central bank. Central banks don't merely manage debt. They manufacture it. Each time the Federal Reserve or the European Central Bank buys government bonds, new money is created in exchange. The liability of one balance sheet becomes the asset of another. Every dollar in circulation represents a unit of debt somewhere else. There is no such thing as debt-free money. Every coin, every bill, every digital transaction carries an invisible IOU engraved on its surface. For decades, this loop has sustained itself on one thing: trust. As long as investors believe governments will pay interest, even if they never repay the principal, the machine keeps turning. But what happens when that belief begins to crack? When confidence fades, the illusion breaks. It doesn't matter how strong an economy looks on paper. If creditors doubt repayment, the numbers stop mattering. That's when debt transforms from a symbol of power into a weapon of collapse. We've seen it before. In 2010, Greece became the warning sign of the modern era. Years of easy borrowing had built a fragile house of cards. When bond markets began to lose faith, yields spiked overnight. The cost of borrowing tripled. Panic spread. And suddenly, a modern European state was treated like a failed corporation. The European Central Bank and the International Monetary Fund stepped in with what they called a rescue package, but it came with a price: austerity. Taxes rose, public spending was slashed. Hospitals, schools, and pensions collapsed under new cuts. Unemployment soared above 25%. For many, bailout became another word for national punishment. In Argentina, the story repeated with different actors. After decades of borrowing to maintain political promises, the country defaulted again and again. Each time, foreign investors fled, inflation exploded, and the peso died another death. Debt became not just an accounting figure, but a national curse passed from one generation to the next. Sri Lanka, Lebanon, Pakistan, the list keeps growing. Every time the pattern repeats: loans, loss of confidence, collapse, and then loans again. Because even when the system breaks, it quickly rebuilds itself from the same pieces. The faces change. The creditors change. The names of the institutions change. But the underlying logic remains untouched. New loans replace old ones. Old debts are renamed, restructured, or rolled over. The machine resets. That's because in the 21st century, debt isn't meant to be repaid. It's meant to be renewed. Governments today don't plan to pay off their debt. Not now, not ever. That's not a conspiracy. It's a strategy. When you or I take out a loan, we're expected to repay the principal. But governments operate by a different code. They treat debt like a rolling subscription, a service you never cancel, only renew. Economists call this refinancing. They issue new bonds to pay off old ones, turning repayment into a rhythm, not a resolution. In this rhythm, interest becomes the real product, not the borrowed money itself. Interest is the rent governments pay to maintain stability, the fee for staying in the game. And that rent has become the oxygen of the global economy. Think of the system as a shark. It has to keep swimming to breathe. If borrowing stops, if refinancing stops, the shark suffocates. That's why the United States will never truly pay off its $38 trillion in debt. It will refinance it indefinitely. Japan has done the same for decades. Its debt now exceeds 2.5 times its GDP, yet its bond yields remain near zero. Investors don't expect repayment. They expect renewal. Why? Because government debt, paradoxically, is the safest asset in the world. A U.S. Treasury bond isn't seen as a liability. It's seen as collateral, the foundation upon which every pension, every mortgage, every investment stands. Banks use it as security. Central banks treat it as money itself. The world's financial markets depend on governments not paying off their debt, because if they did, the system would collapse. Imagine Washington suddenly deciding to eliminate every last dollar of debt. On the surface, it sounds responsible, even noble. But in practice, it would be catastrophic. The global financial system would lose its most stable asset overnight. Banks, pension funds, and insurance companies would find themselves stripped of the safest collateral they possess. The supply of dollars, most of which are created through government debt, would shrink dramatically. Deflation would follow. Markets would crash. Economies would freeze. Paying off the debt would destroy the very structure that makes the economy function. That's why governments do the opposite. They keep issuing new debt, not recklessly, but rhythmically, like a heartbeat pulsing through the veins of capitalism itself. Each bond issue, each refinancing cycle, keeps the flow of money alive. And as long as the world believes in the value of that debt, as long as investors keep buying, central banks keep rolling, and citizens keep paying taxes, the illusion holds. The illusion that this is sustainable. But the key word is belief, because what holds this entire system together isn't repayment, it's confidence. Confidence that tomorrow will look roughly like today. Confidence that governments will honor their promises. Confidence that the dollar will still be worth something when the sun rises. Confidence is the invisible gold backing every paper promise. When that confidence wavers, the results are swift and brutal. Currencies collapse in days. Bond yields spike overnight. Nations that seemed unshakable suddenly look bankrupt. Political leaders fall. Social contracts crumble. In those moments, the abstract becomes personal. The invisible system becomes painfully visible. The bondholders, the rating agencies, the IMF, the entities that seemed distant and faceless suddenly have names, faces, and power. They decide which nations will be saved and which will be sacrificed. And yet, even after the pain, even after collapse, the same game restarts. Because debt is no longer just an economic tool. It's the operating system of civilization. Every loan, every bailout, every refinancing is a software update in the same eternal program. Keep the machine alive. That machine is built on trust, and trust is built on time. The longer the system lasts, the more unthinkable it becomes to question it. People forget that this whole architecture is man-made, not natural. That we could, in theory, design something else. But history suggests we rarely do. We simply rebuild the same system with new names and slightly different rules. And each cycle, the scale grows larger. The stakes grow higher. The illusion grows more fragile. Because debt has now expanded far beyond governments and corporations. It's no longer just numbers in ledgers or bonds in vaults. It's the foundation beneath every dollar, every digital transaction, every economy. And in this new reality, debt itself has become money. Debt and money have merged into the same thing. There was a time when money represented something tangible, gold, silver, or a promise backed by a vault. But that era is gone. Today, every dollar, every euro, every yen is simply a claim on debt created somewhere else. When a government issues bonds, it creates debt. When a central bank buys those bonds, it creates money. One side borrows, the other lends, and both record an asset. The same promise exists twice, once as something owed, and again as something owned. That duplication is the heartbeat of the modern economy. Every new loan is new money. Every repayment is a small act of destruction. That's why the system must always grow. Stagnation isn't safety. It's suffocation. If that sounds abstract, look closer at what happens each time the Federal Reserve announces quantitative easing. The Fed buys government bonds using money that didn't exist the day before. Those dollars flow into financial markets, raising the prices of stocks, property, and commodities. Wealth appears to grow, confidence expands, and the illusion strengthens. But beneath the surface, something subtle shifts. The world becomes even more dependent on this process never ending. The more money central banks create, the more debt they need to back it. The more debt they issue, the more collateral the system demands. It's a spiral that feeds itself. A financial Ouroboros. A snake eating its own tail. Sustained by the belief that it will never run out of itself. And for decades that belief has worked. It financed wars. It rebuilt cities. It built the highways, the corporations, the internet, the middle class, the modern dream itself. Debt became the oxygen of progress. But oxygen can also feed fire. The same mechanism that built prosperity also magnified inequality. Because when we say we owe it to ourselves, that's only half true. Debt doesn't circulate equally. The interest payments don't flow back to every taxpayer. They flow upward, from the working class, from savers, from consumers, to the institutions that hold the debt. Banks, hedge funds, insurance firms, pension managers, and central banks all earn income from what others owe. Every dollar paid in taxes to cover interest on national debt ends up in a balance sheet somewhere, a dividend, a bond yield, a fund's quarterly report. Debt, therefore, is not just an economic mechanism, it's a social sorting machine. Those who hold the promises grow wealthier. Those who are the promises, the workers, borrowers, and taxpayers, bear the cost of keeping those promises alive. It's the silent hierarchy of the modern world, and it operates so smoothly that most people never see it. They see prices rise, wages stagnate, rents climb, but they don't see the invisible interest chain pulling value upward. Every time governments service their debt, every time citizens pay taxes, every time consumers swipe a card, a fraction of that energy rises into the hands of creditors. This isn't theft, it's architecture. The system is designed that way, and as nations compete to keep their credit ratings high, they shape policy not for citizens, but for creditors. A government's worth is measured less by its well-being and more by its ability to service interest without complaint. Markets reward discipline, not compassion. They price stability higher than justice. It's why entire elections can turn not on public will, but on bond yields. Why nations adjust budgets to please rating agencies instead of voters. Why even the richest democracies act as if they're ruled not by parliaments, but by markets. Because in a sense, they are. Debt has become the invisible constitution of the modern age. No country voted for it, yet every country obeys it. When a government contemplates reform, it must ask not, will this help our people? But, will investors approve? When central banks adjust interest rates, they were not just managing inflation, they were managing global faith in the entire financial order. And so, the illusion deepens. Because while every citizen technically participates in this system, the benefits pool at the top. The losses sink to the bottom. That's why global indebtedness and global inequality rise in lockstep. The two are not opposites. They are reflections. Debt is the mechanism by which wealth concentrates without visible conflict. It's the quiet empire of interest. Empires once extracted tribute with armies. Today they extract it with bonds. The conquest is bloodless, but the control is absolute. The world's poorest countries send billions in interest payments each year to institutions in the richest. Workers everywhere labor not just for employers, but for creditors. Every paycheck contains a small, invisible deduction, the price of belonging to a debt-based civilization. And yet, despite all of this, the machine feels unstoppable. Because both sides, debtor and creditor, have come to depend on each other. Creditors need debtors to keep borrowing. Debtors need creditors to keep lending. The system has fused their fates together. Neither can exist without the other. Debt has become a kind of global religion. Its rituals performed by central bankers, its priests dressed in suits, its temples the glass towers of finance. Its gospel is growth, its sacrament is confidence, and its sin is default. But like all faiths, it demands belief. As long as we believe the system will keep functioning, as long as we trust that governments will honor their bonds, that money will retain value, and that tomorrow's promises will be met, it works. When that belief cracks, everything does. Because beneath the numbers, beneath the policies and projections, lies something profoundly human. Trust. Trust that our future selves will keep our word. Trust that tomorrow will resemble today. Trust that the illusion will hold just long enough for us to pass it on to the next generation. But trust is fragile, and once it breaks, the consequences are swift. When confidence collapses, debt stops being abstract. It becomes suffering. Markets crash, savings vanish, nations unravel. And that's the moment we realize what debt has always been. Not money, not progress, but a promise made by the living to the unborn. A promise that someday, somehow, the bill will be paid. Those who are the promises, who live inside them, work for them, and pay interest on them, survive. It's the quiet engine of global inequality. The world doesn't divide neatly between rich nations and poor nations anymore. It divides between those who collect interest and those who pay it. From households to empires, the story is the same. The family with a mortgage pays interest to the bank. The bank pays dividends to investors. Those investors hold government bonds, collecting interest paid for by taxes. The same taxes drawn from the salaries of those still paying off their homes. The cycle loops inward until debt becomes not just a number but a relationship. One of power. This is why global indebtedness and inequality rise together. Every expansion of credit pushes wealth upward. Every bailout strengthens those closest to the source of new money. It's not a conspiracy. It's a design. The system rewards ownership of debt, not the repayment of it. Debt, in its modern form, is no longer bondage for the borrower. It's leverage for the lender. The irony is that both sides have become dependent on the same illusion. Creditors need debtors to keep borrowing. Debtors need creditors to keep lending. The global economy survives not because of balance, but because of motion. As long as the wheel turns, everyone believes they are safe. But history reminds us what happens when the wheel stops. When confidence breaks, when promises can't be renewed, the abstraction becomes real again. Debt stops being numbers and becomes suffering. Jobs vanish. Savings evaporate, governments fall. People rediscover what debt truly means, a promise that cannot be kept forever. The financial system then does what it always has. It resets. Not with revolutions of gunfire, but revolutions of paperwork. Old debts are erased through inflation, currency devaluation, or default. New ones are written in their place. The cycle begins again, dressed in new language. Stimulus, rescue, recovery. And through it all, debt remains the one invention humanity cannot seem to live without. It allows us to build tomorrow with money we do not yet have, to wage wars we cannot yet afford, to promise prosperity we have not yet earned. It is both our greatest invention and our most dangerous addiction. The modern financial system has turned debt itself into money. Governments issue it, banks multiply it, investors trade it, citizens depend on it. The line between debtor and creditor has blurred into a single global organism, an economy that feeds on its own belief. And yet, this illusion has limits. Because debt, at its core, is built on time. Every bond is a promise made to the future. Every future eventually arrives. If the confidence holding this web ever falters, if people begin to question whether promises can really stretch forever, the world will remember that these numbers are not immortal. They are trust, crystallized into currency. And trust is the most fragile asset of all. Because when it breaks, nothing, not wealth, not power, not nations, can stand without it. So, as we look at this planet now carrying more debt than ever recorded in human history, we face a choice. Continue expanding the illusion and hope it holds, or begin imagining a system that doesn't rely on infinite promises to sustain itself. But until that day comes, the machine will keep humming, the bonds will keep rolling, and the world will keep owing itself, forever. Because that is the hidden truth of the modern age. The plan was never to pay it back. The plan is simply to keep the world believing it will. If this gave you a new perspective, hit subscribe. History has the answers, and I'll show you where to look.